Meanwhile, just to get to the potential effect of tapering on the markets, Gina Martin-Adams, I'd love it if you could elaborate on why you think that it will have such a significant impact potentially on markets that would be unexpected.
Well, I think that the market is somewhat complacent headed into this particular tapering, mostly because we've had such persistent gains. We've gone more than 9 months without a 5% correction in stocks, which is pretty rare historically. We also, though, just rely on history. And historically, every time the Fed has attempted a taper or even a slowdown in balance sheet expansion, or God forbid, they actually start to take the punch bowl away, the market has struggled. And we've seen an elevation in volatility emerge with the taper. So what are the mechanics behind it? Maybe it doesn't even matter. The reality is that investors start to get nervous when the Fed starts to change policy, and we have not seen that nervousness emerge this time around. That, I think, is probably the single biggest risk to stocks going forward. And granted, everyone says, well, this has been so forecasted. The Fed has given us plenty of warning. They gave us plenty of warning to all of those other tapers as well. We had months to absorb.
And this is fascinating. I mean, it's controversial. And James, it sounded like perhaps you come out on the other side, if not on the transmission mechanism, then on the output. How do you view this in terms of the potential surprise from a taper that's largely baked into markets by all accounts?
Yeah, I mean, I agree with Gina. I think that the interesting thing about the comment that Mike made about 180 on the 10-year not derailing the economy, I mean, I completely agree with that. But the reality is that the weakest link in the chain hasn't been the economy for, a decade or more. Realistically, US monetary policy serves three masters. It serves the domestic economy, it serves the global economy, and it serves financial markets. And it's been the financial markets channel and the global economy channel which have been the weakest links in the chain. And so I agree with Gina. The fact that it's been well publicized, we've been hearing communication evolve in a more hawkish direction for some time now, I don't think necessarily prevents there being a market reaction when we get there, not least because, again, as we've already covered, the message has sort of backtracked a little bit after the comments from Dallas Fed Kaplan, and because of some of the recent moves in markets, investors seem to be suspecting that Powell's message might be a little more dovish this week than they were expecting a couple of weeks ago. But I still see this as just a process, and the process is one where the punch bowl is getting smaller and then it will be taken away. And ultimately, risk assets has been the biggest beneficiary of largesse, and therefore they should be the biggest loser when that largesse becomes less large.
All right, well, Jim Bianco, then weigh in here. If you agree with this, and please weigh in if you do not or if you do, this idea here that riskier assets, and I'm thinking of equities, I'm thinking of high yield credit, these are some of the areas that people have pinpointed as possibly benefiting more from Fed largesse. Do you think that they are poised for some sort of pullback that is more meaningful than people expect should the Fed taper sooner?
No, not on the taper, but I think the Fed might have learned their lesson from December of 2018. That's when the last time they did the taper, and Powell used the words automatic pilot, and it'll be like watching paint dry, leaving the market with the impression that it's going to happen. It doesn't matter what the data is. It will continue to happen. And the market freaked out, and 2 weeks later we got the so-called Powell pivot when he said, I'm going to be patient and flexible. So I suspect what you're going to see is they're going to say, we're going to taper, but here's 12 off-ramps. And anytime one of these criteria is met, we're going to take one of these off-ramps. And so the market will be fine with the taper, knowing that if something wobbles or something weakens, the taper's off. Just like last year when they stopped the corporate bond buying program, the market wasn't bothered with that because they knew the minute the corporate bond market wobbled, it would be back on. So as long as they leave these open-ended commitment to if something changes, taper's done, and maybe we even go back to even increasing purchases, I think the market will be just fine with the taper because they know that it will be data dependent as we move forward.
Jim, this is actually a really important point. How big of a wobble does it have to be for the Fed to respond?
That's a very good question. And what does it have to be? Is it the Delta variant? Is it a weakness in the economy, higher inflation, weak jobs, or maybe it's just a 5 or 10% correction in the S&P? I think those are all the off-ramps that the Fed will give us. And if any one of those are met, in some way that the substantial further progress gets downgraded to just further progress, they'll change their policy. But if they come out dogmatic, we're going to taper starting on some date in the future, and it's just going to happen, I think the market is going to have a problem with it like it did in 2018.